All right, let's dive into one of Kuala Lumpur's most famous properties, the Star Residences. On paper, this place looks like an absolute dream investment. But the story its numbers and residents actually tell, well, it's a lot more complicated, and honestly, it's way more interesting.
And this one quote really just says it all, doesn't it? A trophy asset location that has failed to deliver. So how on earth can a trophy asset, the best of the best, fail? That's the huge paradox we're going to unpack today.
So to really get what went wrong, we first have to understand everything that looked so right. Let's build the case for why this was supposed to be a complete no-brainer, a can't-miss investment.
Just look at this checklist. It's got an irreplaceable freehold address right next to the KLCC Towers. It doesn't get more prime than that. You're just a short walk from the train, you've got this insane 100,000 square foot deck of facilities, and you've got shops and restaurants literally downstairs. It's the poster child for a premium, super convenient city lifestyle.
Okay, so that was the dream, the glossy brochure version. But for the people who actually bought in early, the financial reality, well, it turned out to be a whole different story.
Just take a look at the price journey here. Back in 2018, at the peak of all the hype, units were selling for over 2,400 ringgit per square foot. Now, fast forward to today, and the median price has sunk to around 1,920. That is a serious drop.
And what that means is, if you bought at the peak, you're looking at a capital loss of over 20%. So instead of your big trophy asset going up in value, it's actually worth a whole lot less than what you paid for it. Ouch.
So, we've got a financial paradox. But believe it or not, it gets even deeper when you look at what it's actually like to live there. This building is basically a story of two totally opposite realities, somehow existing in the exact same place. Let's just start with getting around. If you don't own a car, this place is heaven. Seriously, it's a 5-minute sheltered walk to the LRT station. It is an absolute dream for the urbanite. But, oh boy, if you drive, it's a daily nightmare. The building is planted on one of the most congested roads in the whole city. We're talking gridlock traffic pretty much all day long. So you've got unbeatable convenience and an unbearable commute all at the same time.
And that same clash plays out inside the building. An owner buys in expecting a quiet, secure, long-term home, a place with a real sense of community. But the reality on the ground? It's a high-density building that feels more like a busy hotel, with a constant churn of new faces from all the short-term rental operations. The dream of a private home smacks right into the reality of a transient hub.
And this really gets us to the heart of the matter. To understand this whole paradox, we have to figure out what this property really is. So what's the deal with Star Residences? Is it a home or is it a hotel?
First, just try to wrap your head around the sheer scale of this place. We're talking about 1,700 units. Just that massive volume creates this constant downward pressure on both rental prices and what you can sell it for. It's a super competitive environment from day one.
Now, here's something really important. Investors often get drawn in by this attractive gross yield number, something like 5.8%. And that sounds great, right? But gross is the magic word here. That's just the rent you collect before all your costs. The net yield, the money you actually put in your pocket, is way lower after you factor in management fees, maintenance, and those times the unit sits empty. So the lesson is, don't get fooled by that headline number.
So who is actually staying here? Well, this chart says it all. A massive 80% of the people in the building are short-term occupants. We're talking tourists and business travelers. Only a tiny fraction are actual long-term residents. So you see, this isn't a residential building that happens to have a few short-term rentals. It's a short-term rental business that happens to have a few long-term residents.
And that right there, that is the fundamental truth of this entire situation. Buying a unit here isn't a passive sit back and collect rent kind of property investment, not at all. It's buying a ticket into an intense, hands-on, high-risk hospitality business that you have to manage day in and day out. Okay, so let's put this all together. When you lay it all out on the table, what are the undeniable strengths, and what are the critical risks that you just can't afford to ignore? Now, to be clear, the good things about this place are really good. The location, it's absolutely irreplaceable. The access to public transport is genuinely world-class. The facilities are amazing, and having shops and restaurants right there is a huge, huge plus. You can't argue with any of that.
But, and this is a big but, the risks are just as real. The property's value has gone down, not up. Your investment is completely tied to the very volatile tourism market. The traffic is a serious pain point for your quality of life, and that high-density, hotel-like vibe just completely changes the experience of living there.
Which kind of leaves us with this one big question, right? When a property looks so perfect on paper but kind of fails in the real world, you have to wonder, is the whole idea of a trophy asset maybe just a myth? The story of Star Residences suggests that maybe the shiniest things aren't always made of gold. And that's a pretty important lesson for any of us to think about, isn't it?